You've seen the videos. They're all over the senior feed right now. File this one secret form and your Social Security check jumps $200, and almost nobody does it. And I want to be straight with you from the first sentence, because I'm not going to sell you that. That version is overpromised. There is no magic form that hands everyone an extra $200, and anybody telling you there is fishing for your click. But here's why those videos rack up millions of views anyway. Because underneath the hype, they're standing on something that is completely true. Your Social Security check is only as correct as the record it's built on. And that record is wrong far more often than you'd ever guess. When it's wrong, you are being quietly underpaid every single month, and nobody is going to send you a letter about it. So stay with me to the end, because the last two places your check quietly leaks money are the ones almost nobody checks, and they're the easiest of all to fix. And the honest truth buried under the one secret form hype is worth more than the hype ever promised. Here's the reframe. Most people assume that a giant federal agency has already calculated their benefit correctly, that the number on the check is just right, nothing to see, nothing to check. But your benefit isn't handed down from on high. It's calculated from a lifetime of paperwork. Every employer you ever had, reporting your wages, year after year, for decades. And in a system that big, things fall through the cracks constantly. If some of your earnings never made it onto your record, your check was calculated on a smaller number than you actually earned. Not for a year. For the rest of your life. The money is real, it's yours, and it's sitting in the gap between what you earned and what they recorded. So here's the mental model, and it's just two numbers. Number 1, the check you're owed, what your real, full work history actually entitles you to. Number 2, the check you get, what Social Security actually computed and deposits. Most people assume those two numbers are identical. And a lot of the time, they're just not. The space between them is what I call the gap, money that is legally yours but does not show up unless you go find it and close it. And the reason the gap survives is that it's invisible from your side. No alert, no letter, no phone call. The check just arrives, looking official, and you assume it's right. So here's the one line I want you to hold for the next 20 minutes, and I'll keep coming back to it. The money is yours. It just doesn't come unless you go get it. We're going to look at the 4 places that gap hides, starting with the biggest one by far. Let me put a face on this. Meet Gene. He's 66, he just retired from a working life full of different jobs, and he is exactly the person these secret form videos are aimed at. Gene almost scrolled past one of them, rolling his eyes, but something nagged at him, so he did the one thing the hype videos rarely walk you through properly. He actually went and pulled up his own earnings record. And what he found there wasn't a secret form or a loophole. It was a plain mistake, 2 full years of his life where the record said he earned nothing at all. Hold on to Gene, because his story is the honest version of the viral hook, and by the end, you'll know exactly how to check whether there's a Gene-sized gap sitting in your own record right now. I'm Jeffrey, by the way. I've spent years reading these Social Security rules and walked my own parents through them. This channel takes the money rule everyone repeats and checks it against what the agency actually wrote, receipt on screen. So let's check this one. To see why Gene's 2 missing years matter so much, you need to know how your benefit is actually built, and it's simpler than they make it sound. Social Security takes your entire earnings history and picks your highest 35 years. It adjusts them for inflation, averages them together, and that average is what your monthly benefit is calculated from. 35 years, averaged. Now sit with what that means. If 2 of those 35 years are wrong, if they show 0 when you actually earned a full salary, then your lifetime average gets dragged down by 2 big zeros that shouldn't be there. And because that average sets your benefit permanently, those 2 bad years don't cost you once. They cost you a little bit every month for as long as you live and for a surviving spouse after that. One clerical slip in 1987 can still be skimming your check in 2026. That's why a record error isn't a footnote. It's a slow leak on the biggest number in your retirement. Let me put rough, illustrative shape on it. Imagine Gene earned around $50,000 in each of those 2 missing years, but they landed on his record as 0. When Social Security averages his highest 35 years, it's now averaging in 2 zeros instead of 250,000 years. That's roughly $100,000 of real earnings quietly erased from the top of his average. Spread across 35 years, that can pull his monthly benefit down by something on the order of $50 to $100 a month. I'm keeping those numbers illustrative because your exact impact depends on your own history. But run it forward. Even $75 a month over a 25-year retirement is more than $20,000. Plus, it lowers what a surviving spouse inherits because the survivor benefit is built on that same corrected or not number. 2 forgotten years from 4 decades ago, compounding into real money for the rest of 2 lifetimes. That is the gap, in dollars. Now you might think, surely this is rare. Surely the government gets this right almost every time. Here's the part that surprised even me. Social Security keeps something called the earnings suspense file. It's where all the wage reports go that the system couldn't match to the right person. A name that didn't line up, a Social Security number typed wrong, an employer that reported sloppily. And that file is not small. By the government's own Inspector General, it holds hundreds of millions of unmatched wage reports, adding up, cumulatively, over the decades, to something on the order of $1.9 trillion in wages, as of the Inspector General's accounting around 2020. Now, I want to be careful and honest here, because the hype videos are not. That figure is not a pile of money sitting there with your name on it. It's the scale of how much earnings data slips through the cracks system-wide. But that scale is exactly the point. If that many wages fail to match every year, the odds that some of yours got misfiled at some point in a long career are a lot higher than anyone tells you. Errors like genes aren't a freak event. They're routine. So, where do these gaps actually come from? A handful of very ordinary places, and knowing them tells you where to look on your own record. 1. An employer reported your wages wrong or under a slightly wrong name or number, so they never landed on your record. 2. You changed your name, marriage, divorce, and never updated it with Social Security, so a few years posted to the old name and got orphaned. 3. A simple typo in your Social Security number on a W-2, one wrong digit, and a whole year floats off into that suspense file. 4. Self-employment income you earned but that, for one reason or another, never got properly posted. None of these are exotic. They're the kind of paperwork hiccups that happen to normal people with normal careers, especially early career jobs, short stints, and any employer that has since gone out of business and isn't around to fix anything. Those are the spots where the gaps love to hide. And some people carry far more risk than others, so let me name who should check their record first. If you're a woman who changed your name when you married or divorced, you're near the top of the list. A name that didn't match your Social Security number is one of the single most common reasons wages get orphaned, and it often hits the exact years a younger you wasn't thinking about any of this. If you were ever self-employed or did gig and contract work, you're at risk because that income depends on it being reported and posted correctly, and it slips more often than payroll wages from a big employer. If you worked a lot of short jobs, or jobs for small businesses that later folded, or you earned income in more than one state, every one of those is another handoff where a year can fall through. And if you immigrated or worked under an employer who was sloppy with paperwork, same story. None of that means your record is definitely wrong. It means the odds are high enough that 20 minutes of checking is more than worth it, and the more of those boxes you tick, the more carefully you should read. Here's the good news, and it costs you nothing. You can see your entire earnings record for free, so pause this video and do it with me right now. Go to ssa.gov/myaccount and set up your My Social Security account. It's the same official site you'd use to claim benefits. Once you're in, you'll find your Social Security statement, and inside it, a year-by-year list of every dollar of earnings the government has on file for you, going all the way back to your first job. And this is the step the hype videos skip because it's not glamorous. You actually read it. Line by line, year by year, against your own memory. Did you work in 1990? Does 1990 show earnings? Do the amounts look roughly right for what you were making then, or is some year weirdly low or flat zero? You know your own life better than any database does. You are the only person on earth who can look at that list and say, wait, that year is wrong. That 20-minute read is the single most valuable thing most retirees never do. Let me tell you exactly what you're looking at, so it isn't intimidating. The statement shows 2 columns of numbers next to each year: your taxed Social Security earnings and your taxed Medicare earnings. For most people in most years, those track your actual pay up to a yearly cap. You don't need to reconcile them to the penny. You're hunting for 3 things. First, any year that says 0 where you know you were working, that's the loudest alarm. Second, any year that looks obviously too low. You remember earning a full salary, but the record shows a few $1,000s, like only part of the year posted. Third, missing years at the very start of your career, when you were young and jobs were casual and nobody was watching this stuff. Print it out or keep it on the screen and walk your own timeline. Where you lived, where you worked, the year you got married, the year you switched careers. The database has no memory of your life. You do. And if a year looks wrong, don't panic and don't assume you're stuck with it. Just note it, because that's the year you're going to gather proof for. That's exactly what Gene did. He sat down with a cup of coffee, pulled up his statement, and started scrolling the years. Most of it looked fine. And then he hit the late 1980s, and there they were. 2 years showing 0 earnings, back to back, for a job he absolutely remembered working. A company that had long since closed its doors. For years, those 2 zeros had been sitting quietly inside his 35-year average, holding his benefit down, and he'd had no idea, because nothing ever flagged it. The check came every month looking perfectly official. Gene didn't find a secret. He found a mistake that the system had no way of catching on its own, because the only person who knew he'd worked that job was Gene. And once he saw it, the gap stopped being invisible and became fixable. So how do you fix a real error? This is where there is a form. It's just not a secret, and it doesn't work by magic. It's called Form SSA 7008, a request for correction of earnings record, and the key word is proof. You can't just tell Social Security, trust me, I worked there. You bring evidence for that year, an old W-2, a pay stub, a tax return, a wage statement, anything official that shows what you actually earned. You submit the form with your proof, they review it, and if it checks out, they correct your record and recalculate your benefit, upward, permanently. One more thing that matters, and it's a reason not to sit on this. There's generally a time limit to correct an old year, about 3 years, 3 months, and 15 days after the year in question. But, and this is important, Social Security lists real exceptions to that limit, including when an employer simply never reported the wages, when it was their own mechanical error, or in cases of fraud. So even an old mistake like Gene's from the 80s can often still be corrected. Don't assume the door is closed. Go check. Quick recap if you just joined. The viral hook, file one secret form for an instant $200, is overpromised. There's no magic form. But the real thing underneath it is worth serious money. Your benefit is built on your highest 35 years of earnings, and if some of those years are wrong or missing, your check is permanently too small. It happens constantly. The government's own suspense file proves the scale. You can check your record for free at ssa.gov/myaccount and fix a real error with Form 7008 and proof. The money is yours, it just doesn't come unless you go get it. And a wrong earnings record is only the first of 4 places that Gap hides. Let me show you the other 3, fast. Gap number 2 lives in Medicare, and it hits people who just retired especially hard. If you're on Medicare and your income is above certain lines, you pay a surcharge on your premiums called IRMA A. We did a whole episode on it. Here's the catch that creates a gap. IRMA is set using your tax return from 2 years ago. So the year you retire, Medicare is still looking at your old, high, working year income and charging you a surcharge as if you're still earning it. That's often just wrong for your actual situation. And there's a fix most people never hear about. Form SSA 44. If you've had what Social Security calls a life-changing event, you stopped working, you cut back, you got married or divorced, you lost a spouse, you lost a pension, You can file that form and ask them to recalculate your premium based on your real current income instead of your old one. That can drop your Medicare premium by a meaningful amount, money that otherwise just quietly leaks out of your check every month for no good reason. Gap number 3 is the one that breaks my heart the most because it hits people at the worst possible time. When a spouse dies, the survivor is often entitled to a higher benefit. But here's what almost nobody realizes: survivor benefits are not automatic. Social Security does not just notice a death and start paying the higher amount. Somebody has to report it and actually apply. So a grieving widow or widower who has no idea there's a step to take can go months or longer collecting their own smaller check when they were entitled to a bigger survivor benefit the whole time. There's also a one-time lump sum death payment of $255 that has to be claimed, generally within 2 years. Small, but it's real, and it goes unclaimed constantly. And even for couples where both are alive, when you apply, you want to make sure the amount reflects the hire of your own or a spousal benefit. And here's a piece almost nobody knows. If you were married for at least 10 years and then divorced, you can be entitled to a survivor benefit on your ex-spouse's record after they die, even if they'd remarried, even if you rarely spoke. People leave that on the table for years because it never occurs to them that a marriage that ended decades ago could still matter. The theme is the same. The system won't volunteer the bigger number. You have to ask for it. Gap number 4 is a grab bag of money people simply never claim because they don't know it exists. First, retroactive benefits. If you claim at or after your full retirement age, you can ask for up to 6 months of benefits paid as a lump sum going backward. I'll flag that one honestly. It's a trade-off, not free money, because taking it sets your start date back and permanently lowers your ongoing monthly check, so it only makes sense in specific situations. But a lot of people don't even know it's an option. Second, and this is a big one for lower-income retirees, there are programs called Extra Help and Medicare Savings Programs that cut your prescription drug costs and your Medicare premiums if your income is modest, and by the government's own numbers, millions of people who qualify for them have never signed up, leaving real money on the table year after year. Extra Help alone can be worth thousands of dollars a year in lower drug costs for someone who qualifies, and the income limits are more generous than most people assume, so it's worth checking even if you think you earn a little too much. If money is tight, those two are worth a phone call to Social Security this week. None of these are secrets. They're just doors that only open if you knock. Step back and you can see the one mistake underneath all 4 of these gaps. It's not that people are lazy or careless. It's that we're trained to trust the check. It comes from the federal government. It's printed official. It shows up like clockwork. So of course it's right. Of course somebody smarter than me already handled it. That trust is the error. Social Security is not a personal accountant watching out for your best interest, line by line. It's a massive system that pays what its records say to pay. And its records are only as good as a lifetime of employer paperwork, and it will never, ever call you to say, hey, you left money on the table. The people who close the gap aren't smarter than you. They just did one unglamorous thing. They stopped assuming the number was right, and they checked. That's the whole difference between the retiree who's quietly underpaid for 20 years and the one who isn't. So here's your homework, and it's genuinely worth an evening. Step 1. Tonight if you want. Go to ssa.gov/myaccount, log in, and pull up your earnings record. Read it year by year, slowly, against your own life, the early jobs, the years around any name change, any employer that's since disappeared. If you spot a year that's 0 or clearly too low for what you were making, that's your Gene moment. Step 2. If you find one, gather your proof for that year and file Form 7008. Don't wait, because the correction window can matter. Step 3. While you're thinking about it, ask Social Security about the other 3. Whether an SSA 44 could cut your Medicare premium, whether there's a survivor benefit you should have started, whether you qualify for extra help. You don't have to be an expert. You just have to stop assuming the number is right and go look. So here's the honest verdict on file this one secret form and your check jumps $200. As stated, it's overpromised clickbait. There is no universal magic form, and anyone promising everyone the same $200 is selling you something. But the thing underneath it is real, and it's bigger than $200 for the people it applies to. Your check is only as correct as the record behind it, and that record has gaps the system will never fix on its own. A wrong earnings year. An IRMA surcharge you could undo. A survivor benefit nobody started. Help you qualify for and never claimed. Don't trust the number blindly, and don't fall for the hype either. Do the unglamorous, powerful thing in between. Check your record. The money is yours. It just doesn't come unless you go get it. If this got you wondering what's sitting in your own record, do two things. Pull that earnings statement this week. Seriously, it's 20 minutes and it could be worth thousands. And grab the free retirement guide linked below. Checking your statement is step 1 of every good claiming decision, and the guide walks you through the rest. If you want the full breakdown of that IRMA surcharge and the SSA 44 fix, I did a whole episode on it. It's linked for you. On this channel, we don't do the hype and we don't do the fear. We check the rule, not the slogan. I'm Jeffrey. Next time, we're looking at the Medicare decision landing in millions of mailboxes this fall. The plans quietly being cut, and what to do before open enrollment closes. That one has a real deadline. I'll see you there. A quick note before you go. This is educational, not financial or tax advice. Every dollar figure was illustrative, and the rules and time limits here come from the official SSA sources below, and they can change. Verify your own record and take any correction to Social Security directly before you rely on it. Check the rule, not the slogan.